Welcome to our comprehensive analysis of Hero MotoCorp as we look toward 2026. As the world's largest manufacturer of motorcycles and scooters, Hero MotoCorp has maintained its dominant position for over 2 decades. With a staggering cumulative production of over 110 million units, the company is not just an Indian icon, but a global powerhouse. For institutional investors and business leaders, understanding Hero's trajectory requires looking beyond the volume to the value transition currently underway. Today, we will examine how this legacy giant is pivoting toward a high-tech, electric future while maintaining its massive market share in the internal combustion engine segment. This analysis will provide you with the strategic insights needed to evaluate Hero MotoCorp's investment potential over the next 3 years. Hero MotoCorp's financials reveal a steady growth and margin management. As we project toward 2026, we anticipate a steady revenue CAGR of 10 to 12%. This growth is driven by a mix of volume recovery in rural markets and a strategic shift toward premium products. Currently, the company maintains an EBITDA margin around 14%, demonstrating strong operational efficiency despite fluctuating raw material costs. Investors should note the healthy return on equity, which consistently stays above 20%. These fundamentals provide the necessary capital for the company to invest heavily in R&D without straining its balance sheet. We expect the 2026 fiscal year to show a significant uptick in net profitability as the premiumization strategy matures. The most critical pillar of Hero's 2026 outlook is its electric vehicle brand, Vita. While initially a late mover, Hero has adopted a right first time approach. By 2026, the company plans to expand Vita's presence to over 100 cities, moving away from its initial pilot phase into full-scale commercialization. The investment in Ether Energy, where Hero holds a significant stake, provides a dual-pronged strategy in the EV space. Hero is focusing on building a robust charging infrastructure, with over 2,000 charging points already established. This transition is not just about environmental compliance. It is about capturing the high-growth urban demographic that is rapidly switching to green mobility solutions. To boost margins, Hero MotoCorp is aggressively moving into the premium segment, most notably through its partnership with Harley-Davidson. The launch of the X440 has been a game-changer, allowing Hero to enter the 400cc plus category, where margins are significantly higher than in the entry-level segment. By 2026, we expect the premium portfolio to contribute more than 15% of total domestic revenue. This strategy also includes upgrading the dealership experience through Hero 2.0 and Premia stores, which offer a high-end customer journey. This move is essential for defending market share against niche players and ensuring that Hero remains relevant to the evolving aspirations of the younger, wealthier demographic. Hero MotoCorp's strategy for 2026 is deeply rooted in international expansion. Currently present in over 40 countries, the company aims to significantly increase its export volume. Regions like Latin America, Southeast Asia, and Africa are primary targets. By 2026, the goal is for exports to account for a double-digit percentage of total sales. The company is leveraging its manufacturing efficiency in India to provide cost-competitive products globally. Furthermore, the global rollout of the Vita EV brand will start in European markets by 2025, positioning Hero as a global player in both ICE and EV technologies. This diversification reduces reliance on the Indian monsoon-driven rural economy and provides a hedge against domestic market fluctuations. Looking at the numbers, market analysts have set an optimistic but realistic price target for Hero MotoCorp for 2026. Based on projected earnings growth and the successful ramp-up of the EV and premium segments, we estimate a stock price target in the range of $5,500 to $6,200. This valuation implies a PE multiple that reflects both its cash cow status in the mass market and its growth potential in new tech. With a consistent dividend yield and a buyback history, the total shareholder return remains attractive. We anticipate that as the EV losses narrow and the premium mix increases, the stock will see a significant re-rating by 2026, moving from a value play to a growth value hybrid. No investment analysis is complete without considering the risks. Hero MotoCorp faces intense competition from both traditional rivals like TVS and Bajaj, as well as aggressive EV startups like Ola Electric. The primary risk factors for 2026 include potential delays in EV infrastructure adoption and fluctuations in aluminum and steel prices, which directly impact manufacturing costs. Additionally, while the premium segment is growing, it remains a crowded space. In conclusion, Hero MotoCorp is a company in the middle of a powerful transformation. By 2026, it will no longer be seen merely as a rural commuter brand, but as a diversified mobility giant with a strong presence in premium motorcycles and electric vehicles. With a projected price target of up to 6,200 rupees and a steady dividend, it offers a compelling blend of stability and growth. For business professionals and decision makers, the 2026 outlook suggests that Hero's strategic pivot is well-timed and backed by a robust balance sheet. As the company continues to scale its Vita brand and premium partnerships, it remains a cornerstone pick for those looking for exposure to the Indian consumption and mobility story.